Good morning. This is Brandon Ramey with Century 21. I'm here with my partner Severio Martinez, also with Century
Hello.
21, and we have Mark Richardson with CSMC Mortgage.
Hello.
So just combined total, I can't do the quick math, but I know over 30 years of real estate experience between Severio and myself.
Yes,
and
sir.
then Mark's also been in the business over 25 years.
Quite
So
a while.
you got a combined of over 55 years of experience. And our goal here today is to share some tips for buyers and sellers that are thinking about either buying or selling in 2020. So there's quite a bit in terms of what we are approached with on a daily basis.
Absolutely.
And we wanted to take that opportunity to share that with you.
Yeah, there's a lot involved in buying a house and having qualified realtors representing you out there and a loan in place that's working for you. We also didn't mention my wife Darcy, who we've been working together. We've been partners. She's been in the business longer than I have. So the combined history we have doing this business is amazing. 50, 60, 75 years all together, it's just phenomenal. And that's what you need as a buyer when you get into this market. Somebody who knows what they're doing, how to represent you the best they possibly can, and to have your loan in place before you do that. So there's a lot to cover.
Absolutely.
Great.
Reputation is very important. Experience is important. And I would say one of the most important things is working with people that you can trust, that you know are looking out for your best interests. So the best thing you can do is talk to your friends and family, find out who they've worked with, who they've had good experiences with. And just remember, if you're not happy with who you're speaking to and you don't feel they're looking out for your best interests, there are experienced agents and loan officers out here who will treat you the way that you should be treated and
absolutely.
take care of you through the process.
Absolutely. And I know you share this too a lot. We've talked about it in the past. You want to know how you can proceed and what you can buy. So the best thing that you can do is talk to a professional, one of us. Our goal is to give you as much information as we possibly can to help you make a decision. Not necessarily drive you into the first home you see and make it work, buy, write an offer. Our goal is to make it the best thing for you. What works for you? Where do you want your monthly payment? Where do you want to live? And then set some goals. And if it's tomorrow, that's great. If it's down the road, that's great. But our goal at this point, when we get started with a client, is to give you as much information as we can, like I said, to help you make a decision.
I think that's very important. Information. It's free information for yourself or your friends, your family. It's good to talk to a lender to start a process of see how much money you can borrow. It's also good to talk to a real estate agent because he will lead you through the process and he will give you the information that you need so you know what to expect and you know what you need to do.
Yeah, great point. So I guess starting out is, a common question, where do I start?
Where do I start?
Right? Is it better to speak to a loan officer first? Is it better to meet with the real estate agent first?
Sure.
And some can benefit in both situations. Go ahead.
I think a good starting point is the lender, no question. Obviously, you want to know where you're going to be moving to, what sort of neighborhood, kind of a price range. But before you go to that next step of write offers, you really want to know what can I afford? What can I qualify for?
Right.
A lot of times people will go online and type in some numbers and it says, oh, I'm qualified for this.
Right.
In theory, you're really not until you sit with a lender, provide the documentation we need. Things like, it's a short list to get the ball rolling, right? We need W-2s for 2 years, we need tax returns for 2 years, a current pay stub, a bank statement, and your identification card. We start with that, and we can tell you specifically exactly how much you can qualify for, and then key that around what your comfort zone is. So you might qualify for $3,500, $4,000 a month, but you don't want to spend that much, so we kind of scale it back a little bit. The key thing I always say to the people that pre-qualify is, what's your comfort zone? Right. Have you budgeted and said, we want our house payment to be right here? Okay, let's work around that number. And then you might look at homes in that price range. Okay, I want my payment at $2,500, $3,000. I don't really like that. I need to get a little bit more. Are we qualified for more? It's good to know that too before you go look at that house. And the payment's $3,500. Do you actually qualify for that? But if you went to see it now, you can't qualify for it. So we want to know that in advance.
Right.
It's really a good starting point. So having those five documents, like I said, W-2s, tax returns, pay stubs, bank statement, and identification card, we can get the ball rolling and qualify you within a 24-hour period so that you're good to go, and and your realtors know exactly where to take you and what you can afford.
Right.
Mark,
Yes.
a quick question. What do you do when a buyer doesn't have W-2s? They have they're self-employed.
Sure, 1099, absolutely. And that's where we run into issues too. If you key those numbers into a website that says you can qualify for this, but you are self-employed, those change drastically. We might have on our tax returns, a lot of time I'll ask the question, how much did you make last year? You're self-employed, you said, oh, I made $110,000, $80,000, $70,000, whatever that number was. But you forgot to mention that you had a lot of deductions on that because we're allowed to do that as self-employed people. So
Right.
maybe your adjusted gross income was only $50,000.
Right.
So we need to be working on the adjusted gross income. That's why it's really important, like you said, different types of income, people get paid differently. Let's get that all together in advance.
Right.
So we know exactly what the numbers are. We don't want to write an offer and then realize, oh, I can't qualify for that because I forgot to tell you about my deductions or this or that. And we want to run your credit too. Credit's huge.
Mhm.
Credit scores are important. We can go as low as 580, but we want to get them as high as possible. There's just some work we can do. You know, initially pre-qualify a borrower. Look, if we paid this down or eliminated this or that, we can get you up 30, 40, 50 points, get you a better interest rate. It might be worth waiting a little bit to do that.
Correct.
And what can we do for you right this second too?
Right.
We'll look at those options. Again, my job is to give you as much information as I can. Here's what you can do now. Here's what you can do 6 months down the road.
Right.
What's best for you, Mr. Buyer?
Right. And a common thing that comes up a lot of times when we meet people at open houses, when we meet them and they're just asking about the market and they'll say, you know, I'm just starting out, just early on, just kind of seeing what's out there. What tends to happen is somebody walks into an open house, they fall in love with the place,
Right.
and then they try to say, okay, what can I qualify for at that point in time?
Yeah.
And what we want to try to encourage is for as much planning and preparation as possible.
Mhm.
Even if you're thinking 6 months, a year, 2 years from now,
Sure.
it is essential that you get together with the right team of professionals
Mhm.
who can help you game plan that.
Yeah.
So you're not trying to figure that out on your own,
Right.
because that's going to give you the best opportunity. And another question that comes up also is just about, okay, well, I hear the market's going to crash. I hear the market's falling down. I mean, 2 years ago, they were saying prices were supposed to be lower, right? And then you were mentioning earlier, Severio, you know, where are prices today versus 6 months ago or a year or 2 years ago?
People were saying all the time, I'm not buying right now. I'm gonna wait until the prices are lower and everything. And today, we're still seeing that our prices are not lower. We
No.
still have multiple offers. We still have prices are steady and a lot of competition out there. So that fact that people were saying, I'm gonna buy, I'm gonna wait until it gets a lower price, we're not seeing it right now.
Sure. Especially now with interest rates being so low too. We've been waiting for prices to drop. That's not happening.
Mm-hmm.
Prices have gone up. Luckily, interest rates are lower.
Right.
I mean, we're looking at mid-threes on a 30-year fixed.
Wow.
FHA loan, literally, I quoted somebody 3.125 today.
Right.
3.125 on a 30-year fixed FHA loan. It's an amazing way to go.
Right.
So people will say, well, yeah, I'm going to wait till I get more money down.
Mm-hmm. Or pay some debt.
Or pay some debt down.
Right.
But the key is, you might think that's the best way to go. Somebody I'm sitting with might think that's the best way to go. But let's analyze the whole package.
Right.
Am I going to wait a year to eliminate $10,000 in debt, but then I paid, you know, $2,500 a month for 12 months. I paid another $3,000 or $30,000 in rent for the year.
Right.
Okay, I wasn't able to save money because I had all this rent to pay. But if you have a little bit now, maybe we can get you into a purchase.
Mm-hmm.
So you're paying yourself by reducing your principal, paying your loan. So again, that's an analysis that, as professionals in the business, we'd
Right.
love to do for you.
Absolutely.
Yeah.
Help you better prepare for your family's future, or if you're buying individually, right? Preparing for one of the biggest investments that
Yeah.
most people make in their life. It's
Yeah.
a 30-year commitment.
Yeah.
So we understand why it's such a scary or tough process, but
Yeah.
it can become a lot easier if you start preparing and planning
Sure
with the
can.
right professionals.
Yeah.
You know, so you brought up some great points, and I just wanted to really emphasize in terms of the timing, right? Because we know many buyers are holding off because they think, well, the prices are just too high. We know they're going to come back down. The reason, the biggest thing we try to emphasize is you buy when you're ready to
Right.
buy, right? If you try to bank it off of where the market's at, is it
Yeah.
at its peak? Is it past its peak? Is it coming down?
We'll miss it.
Real estate is exactly,
Yeah, we
it's a
always do.
long-term investment.
Yeah.
It's the same thing that people tried to do the last time after the market crashed last time. It's like, okay, well, we'll wait. We'll wait till the bottom of the market. Bottom of the market was 2011, was the trough of the market.
Right.
What happened in 2011? All cash investors bought everything up.
Right.
Real estate agents, no offense to anybody, bought a lot of the properties up before the buyers could even do it.
Right.
So unless you had a lot of cash down, there are a few people I know that we're able to finance at that point in time. But what we have to remember is when that market crashed, that impacted jobs, that impacted employment, that impacted a lot of different things. So it's not just like, okay, we're just going to wait until prices come down. It comes down. Now you have more competition with more cash. So the key is buying in the neighborhood that you want to buy in, the house that you want, planning for a long 30-year investment. Ideally, I mean, at a minimum, you have 5 to 7 years of growth, 5 to 7 years of decline. So just on the long side, let's say 7 and 7. That's about 14 years for a recovery. Right. So the peak of the market was 2006 last time, right?
Correct.
14 years later, it's 2020. We're very similar in terms of conditions, prices, affordability, those things. So it's to be careful. So if you buy a property, and a lot of people do this, oh, we're just going to go into something, this is for something temporary, and then 2 years from now, we're going to buy something else. You got to be careful with that plan and that approach. And that's why, again, the right professionals that are looking out for you are going to advise you of every possible outcome that can be there so you can make an informed decision.
Yeah. Agreed 100%.
Thank you.
The key, I think, to the whole thing is the best time to buy is when you're ready to buy. Like you said, we can't get the market right. It's like stocks. We never know when there's going to change. So if you're ready to purchase a home, I think your best bet is to contact us.
Right.
We can walk you through the process, give you as much information as we can to help you make a decision.
Awesome.
Okay?
Yeah. And it's anything else you want to share with us?
Yeah, you know what? I wanted to, what was I going to say? I was going to ask you about, when the buyers are thinking that they need to pay off some debt before they actually commit to you or a real estate agent.
Sure.
And they say, well, you know what? I gotta pay off this account that I have, and do you think it would be wiser to talk to you before they actually do that?
Absolutely.
Because they don't know what accounts are they gonna close or pay off, or
some are better to pay off than others. Some I wouldn't pay off at all.
Correct.
So we're spending $15,000 to get into a house, or $10,000, or spend $7,000 to pay off a credit card, then have to wait 6 more months to save that money again. So again, part of the analysis, that we would do for you. So.
Right. No, great question. And to kind of hammer it in just even more, what you're looking at is there's a healthy amount of debt.
Sure.
Meaning, you can have some debt as long as you have enough income, right? And so what happens in times, and people who earn a good amount of money will go to paying off all their debt, all their student loans, everything that they have before they ever want to purchase a house. Right. And the problem with that is you can miss out on the low interest rates that we have right now.
Absolutely.
As well as now it's harder to save as you're paying everything off.
Yeah.
So it is critical, if you can save some money, to have that money, but also to dispel the belief that you need 20% down to be able to purchase a house.
Right.
One of my wife's also in the business, one of her very first clients was under the impression she needed 20% down to purchase a house. So she never even tried. Because with prices at almost $400,000 to $500,000 out here, that's $80,000 to $100,000 down. So she thought she would never be able to buy here. Yeah. Well, there's some amazing programs out there. How would you say the least amount of out of pocket that you've seen with the borrower that you've helped with the down payment assistance?
The least amount would be on a VA loan. The least amount's a VA loan. VA loan's the best thing in the world. If you're a veteran and you have a job, let's talk. You need to own a home.
Right.
We can give them no money down at all. The next thing is an FHA loan, 3.5% down.
Okay. Very
small down payment, a lot of flexibility on the qualifications.
Right.
There are first-time home buyer programs. Cal half a loan, you can get it with 100% down, or 100% financing. Sorry, nothing down. They cover the closing costs also.
Right.
So there are options out there, but we don't know which one to put you until we talk to you.
Right.
Right. So again, I'd say contact us, and we'll set you up and find the right home for you.
That sounds great. And if you have any questions, please feel free to leave them on the comments here as well. We want to do these updates once a month to just answer any types of questions that come up. So anything that you have, please feel free to comment, subscribe on our YouTube channel. Because this is something that Ramey and Associates and Mark and Darcy Richardson with CSMC Mortgage want to do our best to make sure we inform the public of what's out there so that you can make educated decisions to help create wealth through home ownership. So thank you again for your time. Anything else the two of you would like to share?
I would just say, if you have any questions en español, también hablamos español.
Perfect.
So, puede dejar sus comentarios, nos puede llamar también al 805-233-2347. Con gusto.
Wonderful. And your phone number?
805-304-5626. Easy to remember, it's 805-304-LOAN. So
Beautiful.
you can call Mark and Darcy anytime.
Beautiful.
Thanks for listening today.
Awesome. And my cell phone is 805-815-1327. Again, that's 805-815-1327. We appreciate your time and look forward to speaking to you again. Thank you.
Thank you.
Bye-bye.